ProAlpha Systematic Capital, part of the global investment management firm Monsoon Capital, is one of the fastest growing investment firms in India. The company has been managing Asia Pacific Systematic Fund since 2010 and has received several accolades for it. Through their unique product offerings and an excellent sense of the market, they have been able to create highly profitable products for their customers.
We are registered with SEBI and also SEC of USA because we also run a FII fund known as MAPS. Currently we are managing 23 crores in MATE, which is category 3 AI fund, and managed account we are running 104 crores. In our FII fund we are managing approx 540 crores or 104 million in US dollar. ProAlpha is extremely systematic and disciplined organization wherein we have fixed methods while trading.
Among the many products that the company offers, the MIO, Monsoon India Opportunity Fund, is a product that allows global investors such as HNIs, institutions or family-managed businesses to invest in India. In products like the Monsoon Alternative Investment Trust, MAIT, ProAlpha applies exceptional models of pattern recognition and mean reversion to deliver high returns for their Indian clients. In products like the Nifty Futures Managed Account, the company maintains a dynamic exposure management to generate high returns for their clients. In stock momentum managed accounts, ProAlpha utilizes two distinct models, short and medium term, such that each stock has a weight of 2 to 4% only. So, stock-specific risk is reduced. The company has taken care to ensure that their options trading product, ProAlpha Options Trading, is designed for huge scalability. Through this product, the company has given positive returns to their clients across both ranged months as well as momentum months, which is quite exceptional. Similarly, through the ProAlpha Arbitrage Fund, the company has created great value for their clients by generating positive returns every month, regardless of the direction of the equity market, by exploiting the price difference across cash and derivative markets.
Hi, this is Rishi Kohli. I'm the founder CEO of ProAlpha Systematic Capital. We are Indian subsidiaries of US-based Monsoon Capital, and we manage the alternative, quantitative, systematic hedge funds under Monsoon Capital. Within that, there are two parts of the business. I manage a larger Asia fund called Monsoon Asia Pacific Systematic, which is a $100 million fund or around 610 crores rupees fund, which trades across all Asian equity indices and where there are global institutional investors invested. Apart from that, there is an India side of the business which is currently around 200 crores and growing as we speak, where the bulk of the money is in some combination of Nifty Futures and Nifty Options products, both funds as well as managed account advisory. Within that, we have the Nifty Futures and Nifty Options products being offered separately as well as together as a combo. What is interesting is that as a combo, we found clients to really like the product as a combo, and they've been lapping it up at a more rapid pace over the last few months. And going forward also over the next 6 months, we have a strong pipeline for this product combo. And the reason for that is that both these products, one focused on Nifty Futures and the other focused on Nifty Options, are complementary to each other in terms of nullifying their worst risks, while at the same time each is absolute return focused and has managed to generate reasonable returns over the past few years. To give you an example, over the past 9 months since when we've started marketing these two products as a combo, they have together generated 38% returns, and if you're doing it as an equal 50% combo, then every month has been positive. So that is what gives great psychological comfort to clients as well as generating strong absolute returns. And the part about the worst risk that I mentioned, what is interesting is that the Nifty futures is a momentum strategy, and therefore whether there is upside momentum or downside momentum in the markets, that tends to do very well, while the worst period for it is very tight range bound markets. And in that period of worst risk for the Nifty future strategy, the Nifty option strategy is the most stable, because in stable range bound conditions, that is the most stable and delivers good returns. Where the option strategy can have some risk is in extreme momentum. Let's say the Nifty index is up or down double digits in a month, then that is a period where the Nifty option strategy could lose minorly, but that is exactly the period where the Nifty futures momentum strategy will gain a lot, and therefore the worst risks are eliminated. At other points in time, the combo typically tends to make some money or might be flat at different points in time. Even on the lower side, we do expect that we could consistently make 25% returns every year in this product combo, irrespective of what the market conditions are. So it could be down, up, sideways, anything, but that kind of minimum returns we do expect with very low volatility.
The process to avail their services is simple. You need to open a broking account with any local Indian broker empaneled with ProAlpha and sign the power of attorney document. The company delivers their services by passing trades to the brokers directly on your behalf.
So we have a set of systems wherein each system is coded with a set of rules. Inherently, these rules are momentum in nature, but when the client see the trading, they would not understand what we mean by system trading. So client ideally just see they are going long or they're just going short at the aggregate level. But at the systems level, what we do, that's what I'm trying to explain here. If you just see the screen, at the model level, you would see positions long or short. But it's important also to see how we got that aggregate position at model level. For that, we need to see how each system exposures are. So what I mean by system exposure, for that we need to look here. Say we have a set of 19 systems here. So each systems are assigned set of weights. So say which varies from 10 to 30%. Aggregate at system level, you would see overall model exposure. So say system 1 is short, having exposure 10%, system 2 is out of trade, system 3 is again short, system 4 is again long. So at aggregate level, you would see that system is long 95% currently. So that's what I mean at model level. So now coming to a system trading part, and when we say system trading, basically we do 3 types of primary trades, which is either trade at open or a stop based trading, or trade in last 30 minutes, which is basically trade at close. So just if you see the screen here, this is a front end screen where you would see the aggregate possible trade summary. So say today there was one system pattern had a stop at 8589.4. So what we do ideally in morning, a moment the market opens, we pass this trade to the brokers. So we pass this trade in morning to all the brokers. So if you look at this screen, there was a stop at 8589.4. If you see somewhere here, the stop got triggered. How we do daily execution and order passing, as I just explained a while ago, we had a trade stop at say 8589.4. So in the morning, my moment market opens, my trader will pass the order to all the respective brokers.
So as Mehul explained, the system basic file over there, the same sheet is replicated over here, which I use for passing the trades to all the brokers. We have multiple clients. All the clients are divided as per the AUM, and the sizes are fixed for the whole month, which is only resized every month end. This basic sheet shows me the quantity of each system which has to be given to individual brokers as per the client wise. And we have specifically kept order passing in a manual mode so that to avoid any systematic errors which may shoot out a wrong quantity or a wrong price. So in the morning when the market opens up, the system generates the stops for the Nifty of the day, and all those systems, I just take it around, put on the client's quantities, and it is generated over here, which is a bit automation over here, so that a bit of manual work is brought down. Then we have a messaging system over here, with which I have to just pick up the orders from my Excel sheet and I pass it to the respective brokers. So he comes to know the quantity. So each day morning, all the orders are passed immediately after market open. We just check the stop levels, and I also double check it with the brokers that he has put in a right quantity and a right stop level in the system. And after that, immediately when the order gets triggered, for example, I get an immediate confirmation over here on the messaging system, which is then uploaded into a consolidated file which we manage over here to keep a track if all the prices are in line with other systems and other brokers. So that is how it's a foolproof check where nothing is missed out. If there is some error in broker execution, we immediately get back to him to ask him to correct the trade fills, or if required, we can ask him to reverse the trade and give us the correct fills. So this is how things are properly lined up, which avoids any errors.
I look up to the fundamental long only. It's a system-driven process whereby we buy good quality stocks, like stocks having good quality management, and where the earning momentum is there. A year, our primary objective is to make 25 to 30% CAGR return over long-term horizon, maybe up to 3 to 5 years horizon, and to beat the Nifty or the benchmark indices by a reasonable amount. We basically focus in investing good quality stocks having proven track record of the management. Basically, it's a process-driven investment strategy. We take companies with a market cap of more than 1,000 crores for our filtration purpose. Out of the stock universe, we put some fundamental criteria to filter stocks. Fundamental criteria like return on equity, return on capital, free cash flow, etc., which are globally accepted principle of investing. So after filtering those stocks for investment, we look for earning momentum in the stocks. So stocks having good earning momentum, we generally invest. So from a total stock universe of say 500, in our first filter, we generally filter up to 70 to 80 stocks, and out of that, we choose 30 best stocks in the market. In last 3 years, we have consistently beaten the Nifty benchmark by more than 20 to 25% every year since 2012. And it is not that our model is working only in India. Actually we have backtested the model in US also, and it is able to beat S&P consistently since 1997. So I think it's a very proven method of long-term investment which work globally across all the countries.
One very important aspect from an investor perspective is defining the risk, the probable risk. Most of our models define the downside, or what we call as a drawdown of the system, which we define in advance, and we are sure that this will give much better clarity to investor.
Through exceptional models and market sensing abilities, ProAlpha has been outperforming both the fully hedged and non-hedged INR funds. ProAlpha Systematic Capital, managing your money with confidence and credibility.